Start recording. Okay. All right. I think we're live. So, all right. Welcome, everyone. I'm Chris. This is Crypto with Chris. This is going to be my first inaugural TA episode. I decided I wanted to do this because I do a lot of TA every day. I like talking about it, and I like sharing ideas with people. And there's a bunch of stuff like this on YouTube, but there's not really much where you can sort of directly interact with the host to a large degree. And I thought maybe Twitch could be a cool venue for that. So I decided to set something up. I literally thought of doing this 3 days ago. I've kind of taken a crash course. I've watched about 25 YouTube videos in the last 3 days, and I think I've got it set up. So we're just going to roll with this. Some days I'll have guests on, some days I won't. Today I do. I've got my friend James here with me, and James, while he's not a novice investor, he is a bit of a novice to technical analysis and TradingView, and so he was kind enough to come on today and hit me with a barrage of questions and see if we can share some knowledge. And so with that, welcome, James. Happy to have you on today, and let's get this rolling.
Thank you very much. Now, have you gotten all of your excuses for why this is going to be rough today? Have you gotten them all out of the way?
Yes. Yeah.
Good.
So
Let's get on with it.
yeah, we'll just see what happens. If it's crap, it's crap. Who cares? It'll be a learning experience. It'll be fun. I don't really care. I'm just about having fun. This isn't, high production value anyway. So anyway, yeah, let's just roll. So looking at this, I've got my TradingView chart up. This is sort of my default setup with my watch list on the side and kind of my main, I got my row of tabs across the top here with all of my
God,
active.
there's so many.
I know, it is so many. And sometimes there's even more. Sometimes I have to pare them down because it just gets to the point where the icons are so truncated you can't even really tell what's what. And so I can only fit
I think
so
you're
many.
due for another purge.
I know, right? It's funny too because there's really only about like the first maybe 6 or 8 are the ones that like I'm maybe actively like monitoring or trading, and then all of the stuff on this other side is mostly like random stuff like liquidity and the Dixie and the S&P and stuff like that, and just random stuff that I
Just
don't.
bookmark them. Isn't there a way to just like bookmark them where they don't need to be up?
There is. No, you can turn them off and on. But you just have to basically, once you turn them off, then you just have to go back in here and say like open a layout, or or hit the plus sign here, and then. But I've got literally dozens and dozens of saved layouts, and so it's just, I don't know. It's easier. I don't know. Whatever.
Don't worry, we're not going through dozens and dozens a day. We're
Yes.
we're just starting with a few.
Yes. So, yeah, you said you had some questions. So what do you got? Let's fire away.
Yeah, so as you said, I'm kind of not new to investing, but I'm kind of like new to technical analysis because I got into this because of some like automated trading strategies, and now I'm much more of an investor or whatever. But as my understanding of TA is growing, I'd like to be able to like kind of use the tools a bit more, and I'd like to kind of like learn from you essentially. I think that my first question is around equations, and this is where there's so many indicators and all that kind of stuff, and sometimes you just have to like pump in an equation to do your own that's important to you.
Right.
And a lot of people like do that, so it'll be good to kind of like find out how to do that on TradingView.
Yes. So, okay, let's start with that. Let me pull up one that I have done. So, no, that's actually not a good. Was it this one? Maybe this one. No. Oh yeah. Okay. So here we go. So this is like this is one that I set up, and it's basically the Bitcoin market cap minus stable coins, is what I was trying to achieve here. And really,
Yeah.
to do that, it's fairly simple. You kind of just go and you click the search button up here like this. And you sort of start typing.
Right.
I mean, in a nutshell. But let's kind of dig into this, what we're looking at here. So basically, you pick a source, and with that, here, let me, or I can save. Let me actually, I'll tell you what. Let me make a copy of this one so I don't screw it up, and we can play with a.
And I take it that it's kind of like coding, where like one little typo and boom, it won't work.
Right. Yeah.
Or won't work properly.
Right. So if we kind of look at this, what we're looking at here, you can see it's fairly straightforward. You're basically just putting in a number of sources. So we've got this first source, which is the Bitcoin market cap with the source being Glassnode.
Hmm.
Glassnode provides data to TradingView, and you can pull up all kinds of interesting, cool Glassnode insight from directly into TradingView. So you would sort of input that symbol first. I kind of just like start typing BTC. You can actually, well, here, let me blank this out for a second. I'll copy it first. If you blank this out and just start like BTC, oops.
NTV.
Yeah, and if I can type, you can actually start specifying different sources. So you want to nail it down to just crypto, and then you can say, okay, well, what source do I want it to pull this from? Sometimes if you want it to just be a specific exchange or a specific index or whatever, you can specify that, or you can just kind of start scrolling through all of the different options that it shows you. Like in this case, we can pick Glassnode, if I can find it in the list here.
It was on the left.
There we go, Glassnode.
There. Yep.
Yeah, so you just kind of start typing Glassnode, and then all of a sudden, here's all the different things that Glassnode offers. And we know we're looking for market cap, but yeah, so basically you would start with that. I'm just going to type this or paste this formula back in here, though. So that's how you get started. And then from there, you can start adding additional insight, adding additional symbols. So like I have Bitcoin market cap divided by, and then a parentheses, and then you start looking for other symbols like total crypto cap of USDT, total crypto cap of all of these different other ones, USDT, USDC, DAI, things like that. And you kind of just start adding them in. And if you click on them, it'll sort of paste it up into the top. And then at the end, you can adjust the scale by saying like times 100 or something like that. And it'll say like not found, like whatever you're trying to do isn't found in here. But if you hit enter, if you did everything right, if you hit enter, boom, it pops up with a chart.
Right.
And then this is how you do it. Another simple way, like if you wanted to just say, for example, a much kind of stripped down, easier way is if, say you wanted to look at a pair like, let's just pick something like this Tau token that I'm looking at. So I want to see what the Tau Bitcoin pair looks like, but there's no exchange anywhere where they directly trade Tau for Bitcoin. So I can't just go on to here and pull up like a Tau BTC chart.
Yeah.
I have to kind of make my own. So
Okay.
you can do Tau USD. Oops, I got jumped ahead of myself. So you'll do Tau USD T because there's no USD chart, and then you'll type a slash, and then you say Bitcoin BTC USD, and then you can pick a source. I'm going to pick Coinbase for this source, and now you can see it populated here. Then you go back to this one, and you can pick, we'll just say BitGet, and basically this is going to make me a Tau Bitcoin chart. Let me and here I'll go up here and change the scale and the time and all this stuff. Change to candles. So now we have a Tau Bitcoin chart, even though there's no actual exchange anywhere where we can trade Tau directly with Bitcoin. I can still look at this and get a sense of how it's doing against Bitcoin. So that's kind of a quick, easy way to like throw together a custom pair that's much simpler than actually creating an entire formula. And honestly, it's funny. If you want to do something that's really complex anymore, I just go to GPT and be like, make me a symbol that's like, I might have even done that with this, what was it? Yeah, the market cap here. I think I may have even used GPT for this. Make me a symbol that's all of this, minus the stable coins. And then you can kind of go in and tweak it sort of as needed. But so anything more complicated than just creating a custom pair, I would use an external source because it's honestly going to be so much easier. Otherwise, you'll spend all kinds of time, fumbling through it, trying to figure it out. So yeah, that's sort of a quick answer.
Nice. No, that's really helpful. So equations are essentially when you want to take something and then add this in, take that away, add that, take that away, smush it all together, and it will give you the right thing. And it can give you. And sometimes it can give you tools where there's not kind of like a direct chart for that, and so you can just make it yourself, essentially. Nice.
Exactly.
Yeah, I'm not sure I'll get to creating my own just yet. It might just be a simple one like that. But again, there's people like you. I think Ben Cowan shared one on Twitter the other day, where it was like the Bitcoin dominance against altcoins taking out stable coins. And again, it was like he laid it all out so you could copy and paste it,
Right.
because God knows you don't want to type that. But yeah,
Exactly.
people are doing this all over the place. So yeah, that really, really helpful.
Awesome.
So yeah, I think that part of the reason this sort of came about is like we're talking a lot on the charts and analysis chat on the pro crypto discord on the real vision discord server.
Yes.
So, and we were talking through various indicators, what you use them for and why, and all that kind of stuff. So it'll be good to kind of like maybe go through your favorite ones, your top ones, or ones that you use the most, and are like, this is the most important, this is why, and this is what it tells me.
Yeah. Sure. So perfect. Let's see. Honestly, right now, lately, my kind of, I want to say my bread and butter indicators that I go through that I have on every single chart, kind of no matter what, is a 10 bar moving average, a 20 bar moving average, which are these green and red lines here. The 20 is the red, the green is the 10. And then I use Bollinger Bands a lot, and I can explain why in a minute. And then more recently, I started using this new indicator. You can see these little flags, these little numbers on the tops and the bottoms. This is a chart, or this is an indicator rather, that actually a fellow Pro Crypto member created and is selling. And I found it to be amazing. It's like super insightful. And it basically, what it does is it indicates when it detects divergences in various momentum indicators. And what I mean by that is, well, I can kind of give you a quick idea what I mean by that. So like a divergence would be, for example, when you see kind of this chart sort of starting to swing upwards, let's just say, and then
Yeah.
down here we have this thing called an RSI indicator, which stands for Relative Strength Index. And we can see the Relative Strength Index is actually kind of swinging down a little bit. It's sort of diverging from price action. So that, in its essence, is a divergence. There's tons of different momentum indicators, and usually what that indicates is that price action is maybe not telling all the truth, or it's not showing the actual momentum of what's really going on sort of behind the scenes. And so the more divergences you get in these momentum indicators, the stronger that signal is indicating that likely the price is going to reverse from whatever is going on.
Yeah.
And so with this indicator, just kind of real quickly, it detects a number of different divergences. Like all of these different indicators represent various types of momentum and things like that. And anytime there's a divergence between one of these indicators and price action, it pops a little flag up. And the more divergences it has, amongst this set, the higher the number.
Right.
And the higher the number, the stronger the signal, meaning you're more likely to see a reversal based on that. And as you can see, it's pretty accurate. It's pretty spot on. I mean, every time it pops the flag up, generally there's a price reversal. Not always, but quite a bit. And so, and it's super helpful on multiple time frames. You can look at it on. I look at it on the all the way from the hourly. I look at all these different hourly time frames all the way up to daily, even weekly, even monthly. Although monthly and weekly is really going to more indicate like a larger macro trend reversal, and not so much just price action like we see on a daily level. So briefly, that's what that is. Talking about
So
this.
essentially,
Oh, sorry. Go ahead.
so essentially, price is marching on, but there's like an elastic band that's getting stretched a bit further, and that elastic band might pull it back. If there's more indicators that are kind of like diverging, then the elastic band is stronger, and so it's more likely that price is going to get pulled back.
Right.
Rather than sometimes maybe if it's a weak elastic band, the price can overcome that, snap the elastic band, and just carry on its merry way. So it's not, again, not 100%, but maybe like just it's got a good chance of it happening. And the more indicators that diverge, the greater the chance that the price is going to come back in whatever direction that it's diverging from.
Correct. You do want to
Cool.
be careful though. You kind of want to make sure there's other indicators that are sort of supporting that
Yeah.
idea though. Confluence is the word I like to use. You want to have at least two or three different indicators all kind of telling you the same thing in their own
Yeah.
way. And you can see sometimes you'll get a 1, for example, and it was a hard pivot and it went down for a while. And then other times you'll get like a 5 here and it kind of ignored it for, a week or more. So The number doesn't always mean much,
Mhm.
but generally, like I said, when you get a flag on one end or the other, you can see, whatever, 80% of the time, just kind of looking at, given at the eye test, it indicates a reversal of some nature.
Yeah.
In addition to that, so the reason I like the 10 and the 20 in particular is because the 20, in this case, I say 20 bar, the bar meaning whatever time frame you're on. So if it's daily, it's the 20 day. If it's weekly, it's the 20 week. But the 20 indicates the center of the Bollinger Bands. And the Bollinger Band is basically a volatility indicator. And these big sort of clouds that sort of you see on the tops and the bottom
Hmm.
represent sort of two standard deviations from the center of this band, which is the 20 day. And so usually when price extends way up outside of it on the top or the bottom, that's an indication that price is very overextended. It's plus two standard deviations from the mean that it was on this 20 day. And you know that likely whenever that happens, it's not going to be outside there for long, and oftentimes it has to kind of come back and mean revert back to the center. And so I kind of use that to sort of get a general sense of one, when something is very overextended, and two, when it's likely to kind of cool off for a bit.
So
And
the way that that looks like to me is kind of like a tunnel. There's kind of like a tunnel where Bitcoin the price is likely to flow through. And like kind of anywhere in that tunnel is kind of like, expected or so. When it gets outside of it, then that's when there's kind of like a more stronger pullback or push up essentially.
exactly.
But like the tunnel can kind of like expand and contract in terms of the area where price is kind of expected to be. And I'm noticing at the moment that it really blew up like a balloon, and now it's really, really, really contracted to
Right.
like a narrow point. So what does that
So that's
say?
an indication of volatility. So when it
Mm,
expands, it's indicating that there's a massive amount of volatility happening, and you can see particularly like in this area here, when it really came way down here and then bounced hard way back up, it just blew up like a balloon, like you said. And then once it kind
yeah.
of levels off, like keep in mind it's working on a 20 bar moving average. So by the time it gets up to around here, things have leveled off, especially if it goes sideways this whole time, and these bars or these clouds are going to contract. These bands will contract back down to a little tunnel again, indicating that volatility has settled down. And typically when that happens, we're usually you get a breakout more often than not. Like you rarely see it in these long tunnels for very often,
Mm,
and eventually it breaks out. And so like when we get to here, we can see that it's very contracted, more so than probably anywhere we've seen. And in fact, this
it's really
this
narrow.
this indicator down here that we're looking at is essentially just sort of a linear indicator of that gap. So the higher it up, the more sort of open the gap is, and the lower it is, the tighter it is. And so I like to look at this because this way it gives me another way to compare it to previous tunnels, and I can see how it's super low here, and it's tighter than any of these others, going all the way back to really back to here, back to the big breakout we had back in January was the last time, the line was that low and it was that tight. Not saying we're going to get some massive blowout, like we did back then. The bands don't tell you which way it's going to go. It doesn't tell you how far it's going to go. It just tells you that volatility
It's gonna go.
has totally died down, and
Mm,
typically that means we're due for a breakout in one way or the other. You
okay.
have to do other analysis to sort of gauge which direction that means. Typically, in a trend, it's going to generally follow whatever the overall trend is one way you can kind of think about it. So, yeah, so that's how I use those. This green line, like I said, is just a 10-day or a 10 bar moving average. And I like to have that overlaid over the 20 because it sort of works as like an oscillator, and it helps you more easily identify trend reversals and what sort of the overall trend is. Like maybe if we look at this on a weekly, it's a little bit more, it's easier because it doesn't move around quite so much. So we can see, like, let's look at this bear market. When the 10 kind of flipped over, it pretty much stayed under it, with this minor exception here. It came back and touched it, but it stayed under it for the entire length of that bear market over the
But then it
course of,
crossed again.
and then it
Yeah.
crossed again. So when you see, and notice during this whole time too, basically price stayed on the bottom side of these Bollinger Bands the whole time, and it might come back up and mean revert against the middle, and then bounce off the middle and come back down and pop back out, overextend. It never crossed above the center. Rarely. It never really closed or sustained anything above the center, and the whole time the 10 stayed below the 20. So this is basically the easiest criteria for how to identify a trend and a trend reversal.
Right. So using this then, would this kind of suggest that during that period when it was hugging the bottom of the Bollinger Band, that was the bear market, and now that that's reversed and it's now, for a little while now been hugging the top of the Bollinger Bands, is this kind of suggesting that we are now in the bull market? $1 million question, Chris.
I mean, yes, 100%, precisely. I mean,
Doesn't mean that can't reverse, but
well, sure. And no, and it does, and there's certainly precedent for it. I mean, if you go back and look at 2019, it
yeah.
crossed up and down a number of times. And really, what we're in is what we would call sort of the accumulation phase. We're at the early stages of a cycle. We're coming out of the bottom. We're going to go sideways for a year or more, really until the halving, give or take, is likely. Well, that's provided this ETF doesn't make everything blow up and distort our history. But if we just go based on history, we kind of know that this first year is really just kind of an up and down sideways year, and then things really start to ramp up probably next year.
Cool.
So, but yeah, we can look at, so you can see kind of a few distinct things that happen. On this side, it's bouncing off the bottom. Like I said, the 10 is below the 20, and it mean reverts back to the top or back to the middle. And then once the trend reverses, price then starts bouncing off the top and mean reverting back to the middle. And then the 10 goes above the 20, and it pretty much stays above the 20. And so certainly on a weekly time frame, that's going to indicate a larger, longer term, more of like a macro type trend. But even if you can look at that on any time frame, and it's just as useful pretty much anywhere, and it tells you information regardless. So like right now, we did certainly a trend reversal. We were kind of going down. We kind of came back down and touched this trend line. It broke out. It had the three sort of signature elements. It was on the bottom of the Bollinger Bands. Price then now is bouncing up off the top. The 10 moved above the 20, and everything is trading above on the top half of the bands as opposed to on the bottom half of the bands right now. So
nice.
We're technically, based on that, still in an uptrend. Granted, we do have some key sort of things to look out for here. We can see that the 10 and the 20 have kind of crossed over. So it's going to do that when it goes sideways. It doesn't necessarily mean anything because everything's still going sideways. Another thing quick I wanted to point it out is, so sometimes it's hard to tell with these two lines, the 10 and the 20, just exactly how much they're converging or diverging at any given time. Sometimes it looks like they're running parallel, and it's hard to get a sense of, wait, are these lines actually moving closer together or are they not? And so I added this indicator here, and this one is essentially just a graphic of the space between the actual moving averages. So you can look here and go, oh, okay, yeah, they are actually converging back together, or they are diverging apart, or they are crossed over, or whatever,
I have been going to ask about that. So essentially, you have the candlestick chart and everything laid on top of it, and then below that, you've got these various different things that are kind of much more singular. So the candlestick chart and everything on top of it is everything all together. But then below that, you kind of have the different fundamental ingredients, let's say, that are making up that, and so that can like maybe help you look at something a little bit deeper if you notice something going like, oh, okay, let's have a look down here, see what that's saying.
Right, exactly. It just kind of gives you another way to look at the same indicator and sort of see it from a different perspective, I think. And like with the Bollinger Bands too, sometimes it's hard to tell, well, is this constriction here equally as tight as this constriction here, and if not, how much different actually was it? And so that's why I can look at this
Go
and
down
sort
here.
of get a better sense of what that actually is. So yeah, so that's kind of why I use those. Yeah. Yeah.
Okay. Oh yeah, I forgot to ask about. So in terms of using equations on TradingView, can you do that on any level of TradingView? Because obviously there's the free version, then there's the paid version, the paid, souped up paid version. Like what? Uh,
Um, I think you can. I think you can do equations on any tier. I'm almost positive. I hope I'm not wrong, but yeah, I think you can make any chart. There are other limitations. Like on the free version, you get ads. You're only allowed to use, I want to say, like 4 or 5 indicators at most on any one chart.
yeah,
You're not allowed to
sometimes
have,
gets too much.
yeah, you're not allowed to have multiple layouts. I think even the first, or you need up to 2 tiers up to even be able to do up to 5 tabs, I think.
Right.
Or not tabs, but different page layouts. And
Mm.
actually, let me clarify that real quick. So the reason I've got all these tabs is because initially when I first started, for like the first 2 or 3 years I used TradingView, I would just open up a bunch of tabs, but I would keep them all within the same chart layout, meaning they all had the same indicators. But what would happen is whenever I would, and on each one of the tabs, I'd be like, okay, this one's a Bitcoin one, this one's ETH,
Right. Yeah.
this
Yeah.
one's whatever.
Mm.
And then I'd go and I'd close TradingView, and when I'd open it back up, it would blow them all out and reset them all to Bitcoin or whatever the first tab was. And I'd be like,
Right.
damn it, now I got to go back through all these tabs and like
Do it all
reconfigure them
again.
all again. And so I reached out to TradingView, and they're like, yeah, no, if you want to be able to save all of these independently and have independent indicators and independent settings, you need to make a new layout, a new chart layout for every single one of these. And I was like, oh, okay. So then it was like, oh, well, I guess I need to cough up for the premium because you're only allowed like 5 layouts with, I think, even the pro or whatever. So
Okay, okay, I can maybe start to forgive you for having so many fucking tabs on up there, yeah. Um, so this chart layout, very very good. Let's show them a little bit. So you said that it was developed by another pro crypto member and that you pay for it. So how could, if I wanted to, how could I do that?
So yeah, it was made by he goes by Sander in the Discord. He has a Telegram, and you basically can just go onto his Telegram and reach out to him that way. I think there's a website too. In fact, I'm sure you can buy it from the website. You can pay by cash. You can pay by, or not cash, but card, or you can pay by crypto. I actually just chipped off some ETH because that was easier for me. And yeah, and it's an annual fee. I don't actually remember how much it cost off the top of my head, but yeah, I want to say it was. Well, I don't know. Don't quote me on this. It was like a few $100 or something. Whatever it was totally worth it, because
Yeah.
and I wasn't sure at first because I'm like, okay, I'll try it out. I'll bite. Like I had followed. He kind of teased it a while in his Telegram group and was posting charts with it before it actually went live, and it looked interesting. And so I was like, okay, sure, I'll bite. And so I installed it and I ran it, and I ran it for like a solid month before I really decided to maybe base any action off of it. I just wanted to kind of get a feel of how it worked and what kind of things triggered it and how it looked on different time frames, and just how it responded to price action and stuff like that. And
Which is fair. You don't want to like blind faith, just be like, okay, I now have this thing, and now I shall follow it diligently. Blah, 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 blah.
right. And I think I want to be clear too with it. What's cool about it is there's a lot of indicators out there that people are like, oh, I just want something that's going to tell me when to buy and sell. I don't really want to figure out how to do this. I just want something that'll, make that I can just throw on a trading bot and have it like make me money. And
Everybody wants it easy, Chris.
right, I know. And so, and this definitely is not that. This is what
No.
this is. This isn't giving you recommendations. This isn't making predictions. All it's doing is telling you that it has detected divergences in these momentum oscillators. And then it's up to you to decide if you want to act on that information or not, or if that information, if there's confluence with other indicators that sort of align with what it's telling you. And then from there, you can base your actions off of it. But even with that, it's super helpful and it's super insightful, and it does give me a sense of, okay, I think I have an idea of probably what's going to happen here, or like it'll give you a sense of like for example, right here, this run from here, so this 3, up to this 1. when this one flagged, I was like, yeah, okay, this little rally's probably topped out, which makes sense. It's kind of up back at the same sort of resistance level, the even 30,000. So I wasn't at all surprised to see that flag pop up. And it was like, yeah, okay, great, that makes sense. And from there, I was more or less expecting price to, go sideways for a bit. And, sure enough, it did. So I think kind of the more you stare at it and the more you watch how it works, it'll just kind of give you a better sense of how the chart flows, and just help you sort of be more in tune, I think, with what's going on. So, yeah.
Nice. Okay, so there is one chart that I very much want, and you probably know which one it is because it's probably the one that in the charts chat, I'm like, Blast, can you throw up another little chart of liquidity for us, please? So if nothing else, if you teach me how to like have a liquidity chart on my trading view, it will get me off your back.
Yes. So one caveat with that, is it this one? Yeah. I put this chart on a while ago, and when I first did it, oh wait, no, let me go to this one. When I first did it, it was working all the way down to like the daily level, and then suddenly out of nowhere in like the last couple of weeks, every time I go to pull it up, it's like TradingView now can only show you this on a monthly interval. I don't know why. I'm not sure what happened. I didn't change anything, but just suddenly it's like, no, you can only look at it on the monthly. So I need to kind of dig back into it and figure out what's going on there. But more or less, here, let me get rid of, you can have multiple panes. But this is basically the chart. And to be honest, this formula I actually got from the Discord, from the Pro Crypto Discord. I don't remember who pasted it.
I think I remember there was we had a big conversation around it at the time, so I think I remember which one you mean. Like,
yeah. So, but this is it. So, and that's the cool thing about Discords and stuff is I can just copy this and message it to you and
yeah,
and you'll have it. So, and you just paste it in and it just works. But again, it only works on the monthly level at the moment, and I don't know why. But this is it. It's basically just showing all of the different central banks, and forgive me because I'm actually super ignorant on a lot of how the mechanics of a lot of this works, but I don't even know what technically this is a chart of. It's just global central bank liquidity is sort of what I know it to be. But I don't know if that means that these central banks are injecting money into the system. And if that's the case, I don't exactly know what that even means. Is that in terms of like extending credit or buying positions in things or all of the above or what?
so I actually have a little bit of thoughts around this. So essentially, so yeah, for the listeners, why I want the liquidity chart is essentially. Since 2008, when liquidity has gone into the system, when liquidity has gone up, asset prices have gone up. It's literally, it can be literally as simple as that. And that can happen despite what is happening in the real world. So at the moment, I think there's a number of commentators saying that this is like literally the most hated rally of all time because every asset prices are going up and everyone is like, why? Things are going to sugar honey iced tits. Like, why are things going up? It's because liquidity has gone up, and therefore, when liquidity has gone up, asset prices have gone up. So, this is why I want to keep an eye on it.
Right.
This is why I want to know about it. And the interesting thing about it is that going to QE, quantitative easing, we've now kind of reached a point where QE sort of really came in big in 2008, and since then, but it's now political and it's now politically sort of unsavory. Now, the old definition of the original definition of QE in the US, don't know, obviously different countries have different definitions for different things, including what is a recession, blah, blah, blah. But the original US definition was QE was when you were putting liquidity into the system by whatever means.
Right.
Now, though, they're trying to say that, like, a reduction in the TGA account taken out of reverse repo, that's not QE. The UK, when we had the stupid government doing stupid things and the Bank of England had to basically reverse the quantitative tightening, and essentially what he needed to do was support asset prices. And to do that was to do something where I can't remember the exact mechanism off the top of my head, but they were at pains to point out that it was not QE. But what it essentially did was inject liquidity into the system. It supported asset prices, helped them to go up, and it essentially does the same thing. And it would have counted as QE under the original US definition.
Sure.
And so we've now reached a point where like kind of governments are kind of shy about doing QE or not. And so we're probably going to get the definition narrowing and narrowing and narrowing, and they'll probably come up with various um various mechanisms of like, oh, we're doing this, but it's not QE. But this liquidity chart will tell you the truth.
Right.
I'm saying is that it doesn't matter what they're saying. This is what is actually happening to liquidity, and therefore the effects will follow suit.
Makes sense. Right. So yeah, so I've got this one here. There's actually another one that, no, wait, this one, yeah, same deal here where it only works on monthly. So this is another one. Okay. The top one is the same chart we were just looking at. This other one here is another chart shared by another person in the Discord, and forgive me for not remembering who. I want to say maybe it was Isaiah, because he's, a whiz like that. It likely was. So this bottom one is a different formula, completely different symbol, everything, but it's fairly similar. And I could only get it to display in this fashion with this type of bar chart. But it's kind of telling a similar story that we can see here. So yeah, I've got both of these. I can share them with you.
Mm-hmm.
But yeah, and again, I don't know. Obviously, these probably aren't going to be 100% accurate. I do think it does paint a picture though that you can base some decisions off of, because I have been following this particularly when I could look at it on the weekly level and even the daily level, and it was almost in lockstep with what Bitcoin was doing
Yeah.
at the time. So it's certainly showing something that is the truth, however it is that it's working. So
Again, doesn't necessarily mean it will show the truth forevermore and happily ever after, but like for now,
right.
that's what we're seeing. And so while it's doing that, you'd be a fool to bet against it, essentially.
Exactly. So yeah, so these are the two liquidity charts. I wish I knew what all this was, but I totally don't. I just was grateful that somebody pasted something cool in the Discord that I was able to use, and I do want to figure out if I can see what's going on with why it only displays on the monthly now. But still, it's helpful, and we can see that in the last 12 days we've got new money coming in. So that's why another reason why I think we're due for a pump from Bitcoin likely. And we can kind of look over here. I've got the major U.S. stock indices here, and they're all in the green too. So
So essentially, when the chart, the Bitcoin chart that we were looking at earlier, and the Bollinger Bands are tightening, and everything's pointing towards there's going to be a breakout, potentially one way or the other. Which way is it going to be? Maybe look towards the liquidity chart, see what liquidity is doing. Looks like there's new money coming in. So okay, based on that, I reckon that the breakout is more likely to be to the upside.
yes, that's my take too. And then I know I want to touch on kind of briefly too, like cycles tracking with Bitcoin and other asset classes too. But I follow, Bitcoin basically tends to go in 60-day-ish cycles. I mean, they can vary quite a bit, but round about 60 days. And we knew we had a new cycle form. I think we're on about day 26 right now. And so it's not uncommon to see, an initial pump out into a new cycle. Like we had another one here, another one here. Typically a new cycle is formed with a pump after a major, down. And so sometimes in the middle of a cycle, right around between day 25 and 30, it will level off. Sometimes it will even kind of settle back down a little bit before kind of going on one more big push up to roughly day 40, day 45, somewhere in that window before coming back down into the cycle low. And of course, again, it varies a lot. Some like this one went up to 52 and then 69. This one only went to 35 and then 45. But on average, they're around 60 days. And on average, in an uptrend, the peak occurs roughly around day 40. and in a downtrend, the peak occurs roughly around day 20. And so, with that said, I think that we're kind of coming into the middle of this current cycle, and I think we're in an uptrend overall. The bias is to the upside. We know that starting from January, we've been in an overall uptrend, and basically, if it's not going to go up from here, then that's a major sort of invalidation of this entire current uptrend, bull trend that we're in now, and that would be very unusual. And so, you can kind of factor in all of that. Now, that said, it's quite possible that what that might look like is, it might peter out back down to this trend line here that kind of goes back to the beginning, that it's sort of had a couple of good solid touches on. So it might, inch back down to here and then bounce up from there, or it could just go straight up from here. But I feel like those are probably the two sort of most likely scenarios. Of course, none of this is a guarantee. It's all just probability. But that's kind of what I'm guessing. I'm not placing any bets on any of these decisions. I've kind of, I'm holding more longer term. I'm not actively trading short term stuff at the moment, so I don't really care if I'm right or wrong. I just kind of will look at this and sort of in my head kind of play out what I think might happen, but in the end, it doesn't really matter either way.
You're not just going to snooze in the meantime. You're still going to be like keeping an eye on things.
Sure. Yeah. Because it's just sort of fun to follow. But again, I'm not actively trading this right now, so in most senses, I don't really care what it does, as long as it keeps going up eventually, which I think obviously it will. That's why we're all here. So.
Picking up on one thing that you said that like the peak on an uptrend can happen at day 40, whereas the bottom of a trend on a downtrend is like day 20. Harkens back to like something I hear a lot everywhere, is that it takes much longer to climb the mountain than it does to fall down it. And there's different commentators use various different analogies for that, but essentially means the sort of same thing.
Well, yeah. Here, let me kind of zoom this chart. So, I mean, another way I like to think about it is if you're, say if you're in an uptrend, generally, price is going to spend more time going up than it is going down, if that's the trend, and so that generally will manifest itself in sort of, 2/3 of a 60-day cycle, it's going to spend going up, and the remaining third, it's going to spend going down. And like it illustrates super well, like if we go back to 2017, for example, that was kind of the most clear. Let me go way back here. The most clear sort of manifestation of this. I wasn't tracking the charts back then, but we can kind of see it. I mean, you can see it'll go up, it'll peak, it'll drop. Round about 60 days later, another peak, drop. It'll push up, drop, push up, drop. And it just does this. And it just over and over again, here again, drop. And most of these drops are fairly significant. I mean, upwards of 25, 30+% or more, And so if you kind of see this, you can sort of see these patterns repeating themselves over and over again. And you'll notice in real time when these things are happening, everybody freaks out. You'll get to a cycle peak and you'll have a 30% drop, and everyone in the news and in the sort of crypto media is going to be like, oh my God, is it over? The sky's falling, 30% down, get out while you can, kind of thing. And I'm just like, come on, man, this happens every give or take 60 days, like clockwork, I mean, just look at the chart. It's built in. This is just sort of how it works, and then on the other side, it'll drop and then it'll kind of do a little peak, like, in a bear market, maybe 20 days up and then a big down, and 20 days up and then a big down. It's spending less time going up and more time going down. And so it's just the same thing, but in reverse. And here we go again, 60 days, 60 days, 60 days. It just repeats itself over and over again. Sometimes you'll have crazy ones, like coming into the end of 2020, we had this massive 78-day cycle that basically peaked on 78 and then bottomed on day 79 and then just
next day,
blew up again.
Wow.
And so you'll get these, and then once you see, like here was a good example too. So we had a clean, 43-day cycle high, 57 low, another textbook cycle right after it, kind of day 50 high, but then 60-day low. But then here, once we topped out in this first peak of 2021, we had a 20-day high. And so that should have been a red flag to a lot of people. Like, hey, wait a minute, maybe we're starting to level off here. And then too, like if you go and look at this on a weekly time frame, it was even more sort of illustrative. So we had a day 20 high, and then suddenly we start closing below the 20-week moving average here out of nowhere. Like first we're way overextended, on the weekly, even riding the top of these outside of the Bollinger Bands, more than 2 standard deviations overbought for like literally months, and then all of a sudden it just stopped and it went sideways. And then we had a 20-day cycle high. And now you don't know the peak in real time in the moment when it's happening. You only know in retrospect, of course, but once you start to see, well, it kind of peaked up here and then it didn't start forming a newer high. And then suddenly we close below the 20-week moving average after having been well above the 10-week moving average for many, many weeks in a row. This was like a huge indication here that the trend, the macro trend had changed, that the run was over. And to a large degree it was. And then, again, another what's called a left translated cycle, meaning it peaks before the midpoint as opposed to after the midpoint. So we had 2 left translated cycles in a row, which was kind of scary. But then that ETF came along, that futures ETF, and somehow fueled this sort of over leveraged artificial kind of rally. And again, we had 2 more textbook 60-day cycles, a perfect 48-day top, 63-day low, 49, 66. And then into the year-long bear market. But it makes it so easy to kind of keep perspective, I think, on what we're seeing and understand larger trends and trend reversals when you kind of look at these moving averages and factor these cycles and where the peaks are occurring within these cycles. I think it really sort of paints a really solid picture of how to just gauge what it is you're looking at on both a high time frame and low time frame level. So,
and if we're right and we're in the next sort of bull run, and hopefully it will continue for a little while longer at least, but like when we're sort of wondering, okay, when is it that we're going to be hitting the peak again? Is this kind of like what you're going to be looking at? If we see another sort of 20-day peak, is this when you're going to be like going into the charts chat and being like, I think we're close? Is this what you're going to be looking at mainly?
Absolutely, yeah. I mean, I'm not going to put so much weight on it during sort of these early stages, because you're going to get weird cycles like this last one. We had a day 12 high. You're going to get weird stuff. There hasn't really been enough momentum to form this sort of big outsized trend like we would see here in like these parabolic run-ups. But yeah, once we do start a big run up like this, absolutely, I will be looking for a weekly close below the 20-week. And even the 10, it'll start to give me pause because as you can see, for this entire run up, I mean, it was literally just coming down, and even it would do a 30% correction, it still is bouncing off the 10-week moving average the whole time. And so once we get a big close below the 10, that's going to start to give me pause. And then certainly a close below the 20, I'm probably going to cut bait at that point. After a run like something like this. So yes, to answer your question, that's certainly something I'm going to be keeping a close eye
on. Okay.
Yeah.
So yeah, I think. Is there any sort of like major indicator or something else that is super important that like we should be going through?
Well, in terms of like a bigger kind of macro time frame, another thing I look at is this thing called the pi cycle top here, which I'll touch on briefly.
Oh yeah, I remember you mentioning that.
Yeah, and so this is a really curious indicator for me. Like, I don't know what kind of drugs the person was on that came up with this, basically, but because what it is like. It is I want to say it's one of these is squared. I don't remember which one of these. It's the 350-day moving average and then the 111-day moving average squared, I want to say. I think it's the 111 that's squared. I could be wrong. Anyway, one of them is squared, one of them's not. And where 350 and 111 came from, I'll never know. But uncanny, it's called every single top. And this one,
It
it didn't
fits.
flag this thing, but if you zoom in, you can actually see the little dotted line that it formed. Um, and here, actually, it's more interesting to even look at it on like the weekly and the daily level. Um, so yeah, here, whenever these two lines cross over, and you can see the dotted line that it did form, it flags a top basically. And if you look, I mean, it's almost to the day, like
Yeah.
how what how the 350 and the 111 squared crossing over indicates something like this so strongly and so perfectly every time in Bitcoin's history is just completely baffling to me.
So the two lines like kind of they either touch or they cross, and then the sort of the green line carries on like going wee soaring up above,
Yeah,
while the price is all happening below, which so that's kind of like signaling the change there. So again, we don't necessarily understand how or why, but like it seems to work really, really well. So again, if as long as it's working, why not pay attention to it or have an awareness of it?
absolutely. Yeah. I mean, I'm not going to base everything off of this, obviously,
No.
and it's not going to call every top clearly because I mean, it called this first one, and then it got so reset that by the time the second one happened, the lines were nowhere even close to each other. So
Yeah, yeah.
certainly you can't rely on it for everything. And then another thing I fear is that. Like for example, when we came out of the 2018, 19 bear market, we shot way up, and I feel like it kind of was too much, too soon, too fast, which is sort of why it then corrected for 6 months. But these lines came kind of close to I mean not really close, but close enough, closer than you would think they would. And I worry that like the approval of an ETF, later in the summer or in the fall might artificially cause these lines to cross and make things very confusing. Who knows if that will happen or not, but that is something that I think about. And I don't know how much weight I'll put on it in that scenario. Maybe it'll still signal a midterm top or just like a local top, and maybe we will get a 6 month correction from something like that, and maybe it'll probably be wise to kind of take some profit at that point anyway. But that's something I'm going to kind of keep an eye on in terms of how it relates to the ETF. But yeah, if we kind of look back over time, we can see that both lines have turned back upwards, which is a good sign. Just like we got here and here, and then going back to these other ones too. So we're sort of well out of the bottom, I would say. This is an interesting one back here in the earlier stages of Bitcoin in 2013, 2014. It did do a peak sort of in this, and then in the same 4-year cycle, it did a second pi cycle top peak. And so we could see a scenario like this in the event of it peaking with the ETF. So it's certainly not unprecedented. And I might be looking for a scenario like this in that situation. So I guess time will tell. But yeah, that's another indicator that I think about.
Nice.
So on that note, we've been going a while here.
Nearly an hour, yeah.
I wasn't sure how long the show was going to go. I think when I do these on the more regular, I'll probably cap them to a half hour, 45 minutes. But I think this was good stuff. Is there anything else you wanted me to touch on, or?
No, and I think that that was kind of why I asked the question of is there any other burning indicator that we kind of need to go over? Because again, I think that there was quite a lot there. But yeah, really, really, really useful stuff. It will give me a good grounding moving forwards. I think the only thing that I'll say is that kind of like I am a noob when it comes to technical analysis. I'm hoping that I'm learning more. And yeah, there were a few things in there that I kind of didn't really fully get, and I'll probably go over the recording a little bit and watch it a few times. Might ask you a few questions or so, but like I understood a lot more of this conversation than if we'd had this chat a year ago. So I think there might be a few people watching where like you didn't fully get everything or whatever. That's fine. Keep plugging away. You'll get there.
Exactly. And the cool thing, I'm going to be doing these, I'm going to try and do these, maybe even a few times a week. I don't know if that's
Mm.
too ambitious or not, but you're obviously welcome to come on anytime, as much or as little as you'd like. I'll be doing most of them probably myself because I don't imagine I'm going to have a guest every time, but I'm happy to have
I'm
people
gonna
come
come on
on and
all the time, and I'll be like, Blast the Blast. Remember you said that? Can you explain that a bit more, please?
well, right. No, and I think that's helpful. I think that there needs to be something like this out there because there's lots of really great technical content out there. There's stuff that I love. I talk about people like Cred and Don doing their technical roundup that they do and stuff like that. But a lot of that stuff, like I started watching Cred, for example, whatever 4 or 5 years ago, and when I first heard him do a live stream, I literally understood about 10% of what he
Ugh.
said. But
Yeah,
and there
yeah.
was really nothing out there aside from his own educational content to sort of like learn what was even going on. And so I definitely think there's a market for people that are in your shoes and that were in the shoes I was in early on that can benefit from just kind of having these sort of more early stage discussions of how technical analysis works and what you can do and what some of these indicators mean and how you can glean insight from them and all kinds of stuff like that. So it's totally worth doing. So yeah.
Nice.
Well, all right. On that note, I guess let's wrap it up. So again,
Thanks for having me.
yeah, thanks for coming on. This was great. I thought this was a lot of fun, and hopefully we can do this again sometime.
Nice. Looking forward to it.
Very good. All right. Thanks everybody for watching, and until next time. All right.
Bye bye.
Bye bye.